Welcome to Part 4 of the MACD educational video series presented by strategictrading.net. To obtain a complete set of all the various parts of this series, please visit our website at www.strategictrading.net or send us an email to support@strategictrading.net. Please take a few moments to pause the video and read the disclaimer. Today, in this fourth part of the series, we are going to look at the idea of divergence and the MACD. And this is one of the more powerful ways in which traders, in fact, use the MACD. We are going to be looking at a divergence between momentum and price. We have a chart here for Apple, and it is a 15-minute chart. It is a candlestick chart, and we have one indicator on the chart, which is the MACD. I'm going to direct your attention to the peaks on the candlestick chart. Let's take a look at some of these peaks. And I'm specifically going to direct you to look at two specific peaks that followed one another. We have a peak right here, and we have another one at this point. Now, naturally, in looking at these two peaks, it's obvious that price went up in the interval between these two peaks. Now, let's take a look at the corresponding peaks on the MACD. So if we look on the chart below, we find that we have a peak here that corresponds to this one here, and we have another peak here and another peak here. Now, I also want to point out to you that even though we did have a slight peak at this point here, it never really materialized to a peak on the MACD. So let's focus on our two original peaks. And what happened? Even though we see that prices went up, our momentum actually went down. This is what we describe as a divergence. One went one way and the other went in another way. They diverged. The opposite of divergence is, of course, convergence, where two movements are coming into the same direction. They converge together. In this case, the movement that we saw between price at the top and momentum on the MACD was one of divergence. So they were moving in opposite directions. Well, what makes this indicator signal especially significant is the fact that it is often a leading indicator in this case. So what it's telling us is momentum is dropping. It basically signals for us that we're going to see a change in the direction of price movement. And sure enough, when we had this divergence, take a look at what followed. Prices dropped. Now, it doesn't necessarily mean they're going to continue to drop forever, but it does signal for us a pending change in direction of prices. This is the significance of the divergence signal that we get from the MACD. Now, when we experience a downward price movement, as we did in this case, this is often described as a bearish diversion. So when prices drop, naturally, this is a bearish divergence. Once again, to review, the most significant aspect of the divergence is the fact that it provides us with a leading signal. The MACD becomes a leading indicator in this case. In a way, it gives us an idea about what will happen rather than just merely showing us what is happening or what happened. Now let's take a look together at a different type of divergence, and in this case I'm going to direct your attention to, once again, an Apple 15-minute chart with, rather than peaks, two bottom pivots, one here and one here. And before we look at the corresponding bottoms on the MACD, let's take a look at what these two pivots tell us, and they show that they're not really that far apart in terms of price. So they're about at equal points. But if we move on to take a look at the MACD, let's see what really is happening in terms of the bottoms on the MACD. They actually went up a fair amount. So if we identify this as a divergence, and we're at this point here, we are anticipating that prices are likely to move up in this situation. And sure enough, if you take a look at what eventually happened, prices did move up and momentum also moved up. So here, even though prices dropped to about the same point, momentum was increasing, and therefore it was followed by an up move. This is what we would describe as a bullish divergence, since prices went up after the divergence that we observed on the MACD. That's it for our part 4 of the series, and once again we invite you to visit us to obtain copies of the rest of the series, or send us an email to support@strategictrading.net.